Well, now that you know the benefits of home ownership, let's talk about how you can get one. Like I said, most people don't have the cash to buy a home off the bat. They usually have to qualify for a loan. Well, when you go to qualify for a loan, the bank is going to judge you as an applicant. And the criteria they're going to use is what I like to call the 3 C's. They're going to look at things like your character, your capital, and your capacity. Character, when banks talk about your character, they're looking at things like your credit score. Do you pay back your debt obligations on a timely and regular basis? Secondly, they're going to look at your job history. How long have you been on the job and how long have you been stuck with a traditional company? Are you someone that bounces around a lot? Are you someone that is somewhat stable and is working? And finally, they want to look at your home address. Same exact things. They want to see, are you planning to live here for a long time? Is this something that you do? You're not just someone coming in here to grab a loan and then ride off into the sunset. They want to know that you're going to be able to honor your debt obligation. Once you get past character, you're going to look at things, like I said, capital. And what that refers to is your down payment. The down payment you make on your home, preferably, what you want to do is have a down payment of 20% so you can avoid mortgage insurance. But when that's not a realistic option, you can always look at the FHA loans, which are great because they have a minimal down payment of 3.5% of the purchase amount, and that down payment can be gifted by a relative. I'll quickly describe my original lesson plan. It was about how to qualify for a home loan, and there was really no teaching strategy or learning theory at work. It was really teacher-driven, where I was simply an orator, pretty much talking to the camera. In this case, the camera, because I had no real audience and no students there that I interacted with. I spent a few minutes describing the 5 benefits of home ownership. Then I went on to describe the ways you would qualify for a home loan. I described what the bank really looked for in a home loan and what they wanted to see in their applicants. In my lesson Redesign, I will teach 2 friends what they will need to know about how to qualify for a home loan and the paperwork that's associated with it. Hello everyone, my name is Mike and my lesson Redesign will be how to qualify for a home loan. I have 2 students here with me, Jonathan and Forrest. They're going to be my home buyers, and I'm going to teach them how to qualify for a loan and what are some of the steps you need to take to qualify for a loan. So you guys are probably wondering, how do you qualify for a loan and why do you even need a loan? Well, if you're like most people, they don't have the cash or they don't want to put all the cash up front to buy a home. So what they usually do is they apply for a loan with a bank. Now, when a bank evaluates your capacity to repay back that loan, they're going to look at 3 things. That's what I like to call the 3 C's that I have up here on the board. Those 3 C's are character, capital, and capacity. So your character is really evaluated by your ability to repay, and the way they assess that is by asking to see your credit score. So they want to see a credit report, and they want to make sure that you have a score of above 680. So to qualify for a loan, you need to have a credit score of above 680. Above 680. Alright? And then in addition to that, they want to see how long you've been at the job. So one way they do that is they ask to see your pay stubs, because they have like the history of when you were hired and how long you've been on the job. But they want to see about 2 years of work history. So 2 years at the same company or in the same line of work. The second thing they want to look at though is they want to look at your capital. Your capital refers to the down payment you made on the home. So the down payment. And in order to assess your down payment and make sure that you do have the funds to pay for this property, you didn't just someone just didn't give you $50,000, $6,000, or you're not just some drug dealer or whatever making money out of nowhere and not reporting it. So the way they do this is they ask to see your bank statements. And that way they can assess and make sure that they can look at your bank statements and see that you have the money and they know where the money came from. so they were able to source it. Finally, that brings me down to my last point, is the capacity to repay. And the way they really assess that is they take a look at your tax returns. They want to see how much money you made last year. And that's how they verify your income. So capacity really just refers to your income. So they want to see tax returns. And they just verify that you make that much money. They're also going to ask, not only see your tax returns, they want to see your W-2s, if you're an employee, and they want to see your pay stubs. All this information, they're going to take a look at your income, and to make sure that you're able to repay the loan, they're going to do something called your debt to income ratio. So that's referred to as your DTI. All DTI is your monthly debt divided by your monthly income, and that gives you a ratio. That way the bank can assess you. If your debt to income ratio is above 42%, you can't get a loan. All right, guys. So to help your understanding with how to qualify a borrower for a home loan, how you guys can qualify yourselves, I printed out an example for you guys. So if you guys take a look, the name of the borrower is Bob, and there is a loan application right there for you guys to take a look at. As you can see, here's the scenario, is that Bob is looking to purchase a home. The home is worth $250,000, and he's going to put a down payment of $50,000. Just because I want you guys to understand the whole concept of how to qualify a borrower, I gave you guys some facts. Just like the new loan payment that he's expected to have is $1,302, and his other monthly debt obligations are $400. So, and pull up his tax returns and tell me how much he makes every year.
$60K.
$60K?
Yeah.
Okay, so yearly income is $60K, $60,000. Now what we need to do to calculate DTI, the formula for DTI, you guys, is DTI is monthly debt divided by monthly income. When we plug this into our formula, we have monthly debt of $1,702 divided by 5,000. And that gives us 34%. His DTI is equal to 34%. Now with the DTI of 34% and a credit score of 732, does he qualify for a home loan?
Yes.
I'm modeling for you guys the correct way to do this and what different scenarios are. That way you guys understand and get the concept. Divide that, put the divide symbol by 12 equals $5,000, and then write monthly income under that. Then write $400 under that, plus 1,302. And then go ahead and do the math. Okay. Now you want to take that number 1,702 and divide it by 5,000.
And you get 34%.
And then you get 34%. So then you put right under that, put DTI equals 42%. Okay guys, I just wanted to let you guys know we're going to do a real life assessment right now. I'm going to give you guys real loan documents. You guys are going to go ahead and see if they do qualify. What I want you guys to do is go ahead and take a look at all the documents, take a look at their income, their credit score. Maybe remember the 3 C's to see if they're able to qualify. And just so you guys know, the real life scenario, some of the facts, you don't have all of them there, I wrote them up on the board. So you guys did the calculations and took their monthly income. Were they able to qualify based on their DTI? Was Bob able to qualify?
Yes.
Yeah, Bob. Yes, Bob was able to qualify. How about Will? Was he able to qualify for the home?
He was too high.
No. And what was his DTI?
63.
That's correct. It was above the 42% that you needed. You know, now that my two friends have had the opportunity to learn about how to qualify for a loan, what documentation is required, how to calculate their DTI, and how important a credit score is, I'm really happy they had this opportunity because they're going to be a lot more prepared in the future when they apply for their own home loan or looking to purchase a house. I would say I'm really blessed to have the experience of reteaching my lesson plan because I was able to incorporate a lot of the learning theory that I learned in 518 into this new lesson. For example, using social cultural theory, social cognitive, and constructivist learning theories that come up with a lesson plan. My original lesson plan was really void of any theory whatsoever. It was really just me talking to the camera and giving information. New lesson plan was extremely effective, and especially the learning theories I integrated into it. For starters, I started off with a social cognitive theory where I modeled for the students and showed them different examples on how to qualify a borrower for a loan. In the clip, you see that I used the example of Bob as a potential home buyer and to see if he would be able to qualify for the purchase of a home of around $203,000. And I showed the students, well, my two friends, how to calculate the DTI, how to read the credit report, and how all those pieces fit together in qualifying someone for a home loan. Second, I used a social cultural theory where I kind of worked with their zones of proximity by giving them a couple loan documents and a couple applications actually of certain borrowers, and I had them work on it individually, and I would walk around and assist them where they needed help, either going over some of the formulas, helping them out with reading some of the documents, or finding out where the income or information was located on those documents. On top of that, I gave them a lot of scaffolding in pretty much the creation of a loan cheat sheet that I gave them. It was a piece of paper that had everything they needed to know, and it recapped the original lesson plan that I gave in the very beginning of the course, where I kind of used a constructivist approach to prepare them for my final assessment. For my final assessment, I used a constructivist approach in two ways. I gave them an authentic learning exercise, and I consolidated their knowledge prior to that exercise. For example, in the beginning of the lesson, I kind of recapped everything they knew and everything they needed to know about the mortgage industry and how to qualify a borrower, and I did it in two ways. I was able to create a loan cheat sheet where I organized all the knowledge that we learned in our first lesson into one piece of paper, and I used that as scaffolding throughout the lesson for them to look at and reference to. For their final assessment, I used a constructivist approach of providing them an authentic learning exercise where I gave them a loan application and had them take a look at the financial documents in the loan application to evaluate if the borrower would or would not qualify for the loan. I would say some of the strengths of this lesson plan was that it took a complex process like qualifying someone for a loan and made it a little more simpler and easy to understand, and really kind of gave them a 1, 2, 3 step process to be able to complete it. I would say the weakness would really be the fact is that the examples that I had to give them were a little bit simple, to say the least. If they ever had to engage in more complex scenarios that you would probably run into if you were working in the mortgage or real estate industry, I'm not sure how prepared they would really be able to handle those situations. If I had to change anything in my lesson plan, I would probably want to integrate a little more technology, probably have my students work on a computer, have them have their phones, because nowadays when people are shopping for a loan, they really do most of the work over the phone instead of in person, or handing over all the documentation to a bank. They do a lot more shopping in the beginning, or email and do it all electronically. So I'd want to integrate a little more technology. But with that being said, overall, I felt my lesson plan was great and really drove the point home. And I was glad to see that my two students were able to learn from the experience and show me that they had picked up what I taught them. So yeah, thank you again for the experience.